All right, let's talk about something fascinating today: trading psychology. It's funny. You can do all the research, you can run all the numbers, but at the end of the day, the biggest single variable in your success might just be, well, you. It's the market inside your own mind.
So here's the million-dollar question, isn't it? It drives us nuts. We all know the golden rule is buy low, sell high, but then we go and do the complete opposite. Why? This is exactly the frustrating puzzle we're going to piece together today.
So, what exactly is trading psychology? Well, think of it as the study of your own mindset when you're making decisions. It's all the emotions, the gut feelings, and the mental states that are running in the background. And let me tell you, getting a handle on this is every bit as important as knowing your charts or understanding a company's balance sheet. Okay, to really get what's going on inside our own heads, we first have to look at the two primal forces that are pulling the strings on the entire market. I mean, these are the big ones that are behind almost every major move. And there they are: fear and greed. These two emotions are basically the puppet masters of the market. They're the reason for those insane bull runs and those gut-wrenching crashes. They are the constant battle happening inside every single trader.
And this really breaks down that constant tug of war we all feel. Fear is what makes you slam on the brakes. It causes you to sell way too early, or it just scares you out of taking a good risk in the first place. Greed, on the other hand, well, it makes you floor the gas pedal, right? It clouds your judgment, makes you take on crazy risks, and convinces you to hold on to a winning trade for way, way too long.
So where does that leave us? Well, these huge emotions, fear and greed, they create all these little mental shortcuts and glitches in our thinking. And we've got a name for them: psychological traps. These are the hidden landmines that can absolutely sabotage your portfolio.
And look, this isn't just some theory I'm cooking up. There's a whole field of study called behavioral finance that's dedicated to this stuff. It basically throws out that old idea that we're all perfectly rational robots and instead says, hey, let's figure out why people make irrational choices with their money.
Basically, these traps fall into two main buckets. You've got your cognitive biases. These are like glitches in your mental software, just errors in how you process information. And then you have emotional biases, which are driven by your feelings, fear, hope, regret. And they can completely hijack your common sense. Okay, let's get into our first trap: overconfidence bias. This is that little voice in your head that whispers, hey, you've got this. You're smarter than everyone else. And yeah, it feels good to think that, but it almost always leads to trading way too much and taking on risks that you probably shouldn't. Next up is a huge one, probably the biggest of them all: loss aversion. So get this. Research has shown that the pain of losing, say, $100 feels about twice as strong as the pleasure you get from winning $100. Our brains are literally hardwired to avoid that sting of a loss, even if it means making a bad decision. And this directly causes one of the most classic mistakes in investing. It makes us hold on to our losing stocks forever, just hoping they'll come back, because we can't stomach the idea of locking in that loss. At the same time, we'll sell our winning stocks way too early just to grab a quick, safe profit. Sound familiar? Yeah, we've all been there. And then, of course, there's herd behavior. This is that powerful, primal instinct to just follow the crowd. It's driven by a massive fear of missing out. The dot-com bubble is the perfect example of this. People just piled into tech stocks not because they did the research, but simply because everyone else was doing it. It was a stampede right off a cliff. Okay, our last trap is a bit more subtle, but it's incredibly powerful. It's called anchoring. This happens when our brain latches onto the very first piece of information it gets, like the price you first saw, and then it refuses to let go. It uses that number as a fixed reference point, even when it's totally irrelevant. So let's say you buy a stock at $50, then it drops to $30. Your brain is now anchored to that $50 purchase price. So you tell yourself, I'm not selling until it gets back to 50, totally ignoring what the company is actually worth today. That anchor is just weighing you down. Whew. Okay, that was a lot of bad news, right? We've gone through all the problems, so now for the good part. Let's talk about solutions. How do we actually fight back against all this stuff and build a more disciplined, rational mindset? So what can you actually do? Well, here's a solid 5-step action plan. First, just get educated. Honestly, just knowing these biases exist is half the battle. Second, make a plan and stick to it. Create strict rules for buying and selling. Third, do your own research. Don't just follow the herd. Fourth, actively look for people who disagree with you. It's the best way to challenge your own assumptions. And finally, find support: a mentor, a friend, someone to keep you honest. So let's bring this all home. Why did we spend all this time talking about the market inside your mind? Because at the end of the day, that is where the real battle for success is won or lost. When it all comes down to it, mastering your own psychology is the ultimate competitive edge. It's what allows you to make clear-headed decisions, to build real discipline, to manage your risk properly. And maybe most important of all, it's what helps you stay in the game for the long haul. It's about building a mindset that can last. So I'm going to leave you with this one final question to think about. Out of everything we talked about today, overconfidence, loss aversion, herd behavior, which one of those traps do you think impacts your decisions the most? Be honest with yourself, because figuring out your own personal kryptonite is the very first step to beating it. Hey, thanks so much for watching. If you got something out of this, do me a favor and like the video, and please support the channel by hitting that subscribe button. It really, truly helps us out. Thanks again.